Let's start. Very good afternoon. We'll start with financial management. I think it's a new subject for you. Group 2. One of the, in fact, easiest subject to study in the inter level. In fact, you'll feel like you have come back to maybe 11th class or 12th class somewhere, because it will have a link with the ratios chapter, with the capital structuring, how the debt has to be raised, equity, etc. So this would be easier, although will require some advanced knowledge of it. It will require something. What we need is we need to understand few things, because since you are CA Inter, it does not feel like, unless until you've done something new, you will not feel like as if we have entered CA Inter. Although what I will be covering, maybe today or initial classes, you'll feel as if this was going back into the 11th class. Maybe some of you, those who especially from the commerce background, they will feel exactly the same. Pawan, you'll feel exactly the same. Few things before, because I'll talk today more. Reason being the first day, so I'll speak more on it. What is the requirement from your side, and what you can expect from my side is. In fact, you'll come to know today how the subject will flow. Initial 2-3 classes maybe to make a base work, so that you understand how exactly we'll move forward. Subject is not tough. I'm saying there is a lot of mathematics, undoubtedly. Mathematics should be there. But this is not a mathematics in which you have to do differentiation, integration, calculus, nothing of that sort. Every number I would be able to read. Commercial mathematics. That means when we talk about the financial management, or in final level when we talk about AFM, that becomes slightly higher advanced level from here. We talk about is commercial mathematics, in which you can speak to someone, you can discuss the number, you can explain the number. Means you can talk the numbers. Today itself will get a framework. The flow of the chapter I'll decide. It's not necessary that the way it is given in your study material same way. Second important part is, for example, the chapter initially which I'll cover could be divided into two parts from my side. Your institute has given in one, because if you combine them, you'll not even understand how it has been structured. Plus, when they give the question in the material, there could be a possibility they'll have combination of 2 or 3 chapters. So depending on circumstances, I'll tell you that what exactly we have reached and till where you have reached, that you can try. Anyhow, you do not have to try anything other than what I'll give you as a study material. What I expect is keep a fresh register for you. Do not combine with any other register. Homework classwork, it's not necessary you make two now, because it's not a children anymore that you have a homework and a classwork separately. Carry some different ink color pens. The different ink color pens you'll come to know today itself. For example, if I speak on the concept, I would like you to cover it with some different color. If I speak on the question and answer, that you can do with the black or blue, whatever of your choice. Different ink color pens will feel, the register will look colorful. Means basically you'll feel like reading. Otherwise, by the end of the subject, you'll not even know when we started, when we ended, which subject was first one, who was the teacher. By the time you reach final, you'll not even feel like saving it. This registered, save till the finals. Because when you come to the final, the first class itself or second class itself will start coming to know that what you have done in your inter level is exactly required in the final level also. The weightage, I think, is reduced in the new course. It's a almost 50-50 they have done, but that is something unjustified, because the content we have does not justify in that matter. But anyhow, since you are not reading, do not study this subject for the sake of exam. One is from the examination point of view, second from that this subject is something which you travel across anywhere in the world, you would be able to apply immaterial of whether you're in India, France, Germany, Japan, Nigeria, Canada, Zimbabwe, Zambia, any country you go, will be able to apply. Only thing will change is some taxation. My subject will become slightly cumbersome when I add tax to it. There could be some possibility of taxation, or there could be some different laws of that particular country, which anyhow do not trouble, because we study as general finance. So in the chapter when we move, I'll tell you that where exactly we require what all things. In between, I'll keep talking. When I come back, I'll make a base work that what exactly this means is and where do we stand. Although books would not be required as of now in the first class, but still I'll ask them. Those are watching live, they can share the link of the first chapter PDF. And I think I have asked him to give you the notes, or anyhow I'll show you the notes. That would not be a challenge. What else I have to tell you? There's nothing. We'll move forward. Financial management we are talking on. I'll try to link my subject with the balance sheet so that you get flow of the topic, what exactly you'll be covering. The entire financial management is divided into specifically two parts. Entire financial management, I think. I'm not saying about the chapter. Maybe chapter you'll have 8, 10. The finals when you go, you'll have 7, 8, 9 new chapters which comes in. The entire financial management works on two functions. One is raising of finance, and second is the utilization. That's procurement of funds and utilization. Exactly same thing when you would have started your 11th class commerce, or whenever you would have studied first chapter, they would have told you cash comes in, capital comes in, then they buy the furniture. You pass the entry. Exactly two functions entire financial management revolves around. In that, what happens is I'll specifically keep telling you the names of the chapter. Automatically names will build up. For example, what I mean is when we say if this is your balance sheet, if this is your balance sheet, this is a liability side in which majorly three sources of finance you have: equity share capital, preference share capital, and debentures. The first and the primary function of any company is known as procurement of funds. Procurement of funds. Anything which you want to copy, rough, formal, you can copy. Anywhere where I'll tell you not to copy, then only don't copy. Otherwise, it's up to you. For example, if I make any rough work, it's up to you. You want to copy or not copy. Equity share capital, preference share capital, debenture, procurement funds. Second function is you buy with them, either it will be for the fixed assets or current assets. This is called utilization of funds. My entire financial management writing is not so bad. Maybe it's afternoon time, might find slightly off track here. Procurement, utilization of funds. Entire financial management would be divided into two parts. Now, if I specifically talk to you about the chapters, for example, these two topics, procurement of funds is basically from where to raise money. That means which sources you'll be raising money. The utilization is where you'll be spending the money on. Now, when I talk about procurement funds, the chapter what I'll start in short while from here is called capital structure. Should I raise money from equity share capital? Should I raise money from preference share, debenture, etc.? That's one of the chapters we have. Then one chapter will come, what is their cost? Because there is no free lunch in this world. Anything which is in finance have to have a cost, whether it's specifically mentioned or it is not. For example, debentures will have an interest cost mentioned along with it. The equity share capital, although directly you do not have any cost attached, but there could be dividend. If dividend is not there, then there could be expectation of the equity holders. So we have a specific chapter for it. So that becomes a couple of chapters. Then comes, should I invest in the fixed asset? We'll have a new chapter called capital budgeting. Then should I invest in the current assets? That will become working capital. It will become entire chapter for me. Then when I utilize these procurement utilization of funds, I have to see whether I am appropriately generating the returns on the assets or not. For example, I raised a money, I've taken a loan from someone. In general language, I'm talking, I've taken a loan from someone as a company, and the rate costing is 10%. I invested somewhere, that return is 12%. That is justified because I am spending 10 and earning 12. How do I decide that whether I am doing good or not? Then we'll have a separate chapter on it. Then there could be a chapter in which he'll decide that when a company raises a money, how do they return back it to the equity shareholders? There will be a chapter called dividend decision. This is your entire FM. All the chapters, if I summarize. Capital structure, what is their costing? That will come. Then should I invest in the fixed assets? Working capital, is my company working properly? Are the machines working properly? Is my gross profit ratio proper? Is my net profit ratio proper? That's a basically analysis of the your numbers. And then would come that what I have earned as a company, I should be distributing it to the shareholders. Dividend decision. So this is entire FM. You need not cram anything. I'll expect you not be cramming any topics out of it. Yes, it could be possibility some terms would be new. For example, when I teach, there could be possibility some of you are very new, because initial classes it will be adjusting to the voice, adjusting to the speed, how I talk. That could be a possibility. So you might get some jitters. Finish of the class, go back home, read once again. 99% I'm sure you will not face a doubt. Still any doubt is there, wait for that topic to finish. The moment that topic will finish, your doubts will go. In fact, I'll only create some doubt that after reading this there could be possibility this doubt will generate, and after a point of a time automatically that will go. In case you get any kind of a doubt, then two ways of doing it. Since you are in class, it's perfectly fine, you can ask there, but the requirement would not be there. After teaching almost now 15-16 years, I have seen that it generally does not arise at all. You can, at the best what you can do is, at the back of some register you can write this doubt is there, so that by the end chapter ends, if that does not go, that means something we have missed out, although it will not happen. So the flow will remain that. First class it will take time, because my English could be the Indian English, you might be in love with the British English maybe, or some of you might be loving US English. You never know. My face I might look very serious, but I'm not serious. It's afternoon and first class now, it's a pressure on me. I do not know you, you do not know me. So by the time 2-3 classes will get adaptable. And also till the tea comes in, the energy level does not come in. I cannot even talk means. I do not know whether I'm standing or sitting. Like, so do not worry on that front. So leave it to me. Another point which is very important, which I differentiate, not criticizing anyone. I have my own way of teaching. Wherever it is required to attach equity markets, wherever it is required to attach the global financial markets, I'll attach. It's not that I have to show you, although technically I would have final level, we have a different way of doing it, because they're all subject is throughout linked with the equity market, debt market, forex market, M&A markets. Yours will have limited. Today only I'll show you something. One thing which I do generally, which I do not know how much time will permit me, that I generally want you to be updated what is happening in the financial markets. You have to be updated with the politics. Attachment is with no political party, neither I love BJP, Congress, etc. That's not something I express. It's only I want to see, does any government, whether it's a state government or whether it's a world governments or whether it's a Indian governments or do they take such decisions which favor the equity markets or which favors the financial markets. So you should be updated on that. Any kind of a war situation, any kind of a crisis in the oil market, how does they impact our finances? Because ultimately subject is one part which anyhow I'll, for example, if I do not talk so much, in next half an hour I can finish off my first chapter. It's such simple chapters are there, because once I tell you this is equity, this is debt, this is debt, you'll be able to understand it. But what I expect along with it, spend 20 minutes in a day at least, or half an hour, on reading any kind of a newspaper, which I'll show you how to read today. What kind of a news you have to read. You do not have to read so much the fire happened in this building, he looted, etc. This much car accident happened. These are not the news that basically troubles when we read. For me, the news is, for example, if Vodafone Idea moved up yesterday 20%, what is the possibility? Is the anyone coming here and investing in that company? Or, for example, today's chapter has a link with it. For example, that kind of a news. Are they getting some funding? If they're getting funding, what could be the position? Will their debt go down or will their debt go up, etc.? So accordingly, the equity markets behave. Equity market will always behave advance what will happen in the next 6 months or 1 year. So they start behaving accordingly. What I expect from you is that I do not expect that you go into that market only because your subject is very limited. That's a very small subject as a part, but you should know that when you raise any kind of a finance, that has a huge impact on the wealth of the shareholders. And when I say use a word impact on the wealth of the shareholders, it means basically the share price gets impacted. We cannot calculate share price, although we have one chapter in your course in which we'll calculate share price, but that's very small. But the how the share price movement happens, psychology also you should understand. The objective will remain in the FMS. By the time you go to the finals, you should not behave as if you're hearing the equity market term for the first time. You do not know what happens in financial market. You do not know what is share price. You do not know what are the stability, what are maybe the credit ratings, etc. So you should not be. For example, if we are facing a debt problem, if we are facing an inflation problem, that has direct impact on our economies and the subject. And especially when you are planning to enter into new India, in which we are expecting the highest possible growth in the coming years. The way we are moving, a 3 trillion economy, 5 trillion, 7 trillion economy, the way we'll move, cannot imagine the kind of a growth will happen. That growth has to be there. You have to be adapted yourself, not only to the subject. I'll just generate that inclusiveness in you. That means you get the feel of I need to learn. Rest I leave it to you. Half an hour every day you should know, either early in the morning or before sleeping, that what has happened around the globe. The way you open up maybe the Amazon Prime or Hotstar or Extra, you can open Economic Times sometime, Live Mint, or any kind of a business paper. That something will help you out. You will feel confident. The confidence will come is how? The confidence will come is when you go out, everyone will talk about, oh, you finished off your SM. Not finished. January end has come. FM course not done. Oh my God, exams are coming. Everyone talks in this that shock language. The moment they talk, na, you have to talk in a language. You know, Mark Zuckerberg is planning to invest in this company, or Tesla is coming in India, and this will be the growth, and we are getting etc. etc. The second person will stop talking. If someone shows intelligence, na, you have to reciprocate politely. I'll show you what news came yesterday. You go back, no one would know what has happened. And I do not know that will be true or not. It's not you have to show smartness, but ultimately the world accepts smart people. Your level is much more important. Same thing I tell the finals, but finals they have already in the articleship, or they are almost on the verge of ending their articleship. In your case, you'll have to apply for the articleship. You have to be smart enough to know it. Since we are spending time, I'm spending my time. At least I want my time to be counted, and I want whatever best I can tell you, because it's beyond your level, beyond the classes level, that I can tell you everything in the markets. But over the years, what I've learned in the my background is merger acquisitions and equity markets. I track equity market day in day out. Means if it's market hours, I do not even get up from the table maybe. So that aggressiveness I track the markets. Teaching is my hobby. I love it. I professionally call it up. So I want that when you go outside, especially as a chartered accountant, you should not sound that you do not know anything. If any movie is released, you should be able to talk. They talk about the movie, you talk about the PVR share, you talk about the INOX share, you talk about the UFO movies. Means you should be able to talk what impact will come on them. Ultimately, any kind of a company is doing good. If revenue would be good, ultimately the share price it would. That is exactly what we'll be talking about. That's just a brief I have given you. It's not necessity. Maybe when you go back home and you go back and tell your parents, oh, he tells about equity market, they'll tell you not to go in this class from tomorrow. There could be possibility some parents, because they fear equity markets is not that bad. I'm not asking to invest. Investing, for example, playing a game and knowing a game is different thing. For example, if Harsha Bogle is there, he does not play cricket, but he know how to talk. He know how to talk. That also puts an impression. Exactly same thing I expect. So you should not sound stupid in front of someone. That is the objective. Any language they talk, and this is something, this subject I'm talking to you, out of all the subject, I don't know about the rest of the subjects. This subject I'm telling you very frankly, whether it's a engineer, doctor, lawyer, any profession, go anywhere, you can stand and talk in this topic, they'll get adaptable to you. Irrespective of it. Sometime later I'll tell you the instances what has happened when I started teaching here. I made some friends in the neighborhood. They do not know what I teach, but they advise me. They're engineers by background. They mean, sir, you should start teaching the equity market course. Means this topic is such in which anyone can talk, and financial market is that only. So it's up to you. If by chance you feel we have a such slight hard hand on the mathematics, do not fear about it. That I'll take care of. Only expectation from you is whatever we do in the class, go back home and revise. That's it. And plus something extra, I'll try at least at the end of 5 minutes. If anything good news has come, that I'll tell you what exactly has happened. For example, some telecom sector I track aggressively. So telecom sector, some news was there, and something happened yesterday. The market behaves on the rumor also. So you should be knowing that rumor also, and why it behaves. That also you should know. Nothing has happened. In accounting, what you do, due respect to all accounting. In accounting, what you do, when the event has happened, you pass an entry. In financial management, we think about what would happen. That's difference between it's a future and that's a historic. That's the only difference. Otherwise, finance accounts both going hand in hand. So this just was a brief base work that what we'll be doing in. I expect from you different ink color pens and register, that's it. And calculators, decent size, not small pocket calculators. This was not a chapter, this was only that entire FM what we'll be covering. These around this table I'll be covering maybe the entire financial management. First heading we can put down is capital structure decision. First heading you can put down capital structure decisions. Just put down the heading. You can put down simple capital structure also, it's perfectly fine. Is this chapter, sir? Yes, this is chapter. This chapter would be divided into few parts. The word, actually when you look at the word now, you should be asking few questions to yourself. What is this chapter about? What we will do and why are we doing it? 3-4 questions should come in your mind. Capital structure, when I use the word, it's almost everyone is clear. I talking about these sources. In this chapter particularly, as a first part, I have divided into two parts, two chapters. Although in institute there is one chapter material. In this chapter, I'll be studying. I want to raise finance. Few chapters, a few topics I'll study. One of them would be I want to raise a finance. I want to know which source should I raise a finance, and the company would go for that kind of a finance which increases the wealth of their owners. And owners technically are only equity shareholders. Are only equity shareholders. Although you would have done preference shareholders are shareholders, keep that in mind. But they practically are as good as debt only. The reason being there is a fixed dividend rate attached here. But for the some ratios, for some calculation, we consider them as part of the shareholders. So owners are equity holders. What will increase the wealth of the holders? That is exactly. And when we say wealth, in accounting term, we talk about earning number. If I talk to you financial terms, we talk about the share price. So both will include under what circumstances, what answer has to be calculated, that I'll tell you in the coming stages. First topic we are doing here is financing decision. Put down the heading. This is the first topic in this chapter, financing decision. First topic is financing decision. Let's put down some theory, please. Under this concept, let's put down under this concept means under financing decision. Under this concept, we will take a decision. We will take a decision from which source, which source to raise money. Under this concept, we will take a decision from which source to raise money. Next line. The amount can be raised. The amount can be raised the amount can be raised from any of the following sources. The amount can be raised from any of the following sources or their combination. The amount can be raised from any of the following sources or their combination. From any of the following sources or their combination. Sir, what does it mean? It means I sorry, I can raise money from equity share capital, I can raise money from preference share capital, I can raise money from debenture, or I can raise combo of equity preference, equity debt, all three. And if we have existing firm which already has some equity, we can even take combo of maybe preference and debt, which will come with the time. That means you can take any one of them or any of their combinations. Let's put down the last line was or any of their combination. So below that I am dictating three sources. First is you can put down the full sentences, please. Equity share capital, ESC, equity share capital, preference share capital. Third, debentures. Third, debentures. Third, debentures. Next line. How do we take decision? That is exactly what we are dictating. How do we take decision? Because any decision when we take, it has to best one out. And what is the best one out now? Below this I am dictating now. The amount should be raised. The amount should be raised. The amount should be raised from that particular source from that particular source oblique sources which gives highest so what is EPS? EPS is earning per share which gives highest EPS. The amount should be raised from that particular source oblique source which gives highest EPS. Is this the only answer? No. I'll modify when I move forward. Historically, conventionally, your institute used to give this. Practically, we do not take decisions on EPS. Practically, we take decisions on the share prices. Any decision which increases share prices. The only problem is share price cannot be accounted for by using your accounting principle. So we have to have certain different parameters which maybe in tomorrow's class or next class whenever we go, we'll be able to make out highest EPS. I know you know how to calculate EPS, but still let me formally calculate the EPS for you so that we are comfortable what format we'll be using in our FM. FM is not bound by any kind of a particular formats unlike your accountancy or maybe some other subjects. We can have the way we think exactly same way we'll write the answers. EPS put down please. EPS is earning per share. So there will be some exception here, which I'll come back at a later stage. There is some exception here, which I'll come back at a later stage. EPS is profit for equity shareholders. Profit for equity shareholders divided by number of equity. What you call number of equity shares in FM, in practical life we call them as the shares outstanding. This term they do not use at Inter. It's called shares outstanding. Number of equity shares. I'll draw a small income statement that we get adaptable to the statement. Income statement. In fact, let me make a statement in the form which we'll be using in the subsequent chapters. Sales, variable cost. The moment you subtract variable cost, you get some number called contribution. The best part of the class is whether you say right or wrong, no marks are deducted. You can speak out anything at least for your unless what? Very good. Will give you profit. You would have learned a profit. We call it as EBIT. It's a new term maybe for you. Earnings. Earnings. Or interest and tax. A very important term going forward will be used EBIT. From EBIT we subtract interest. We'll get term called EBT, earning before tax. Then we subtract this any tax, any amount. Let's suppose I'm assuming a 40% tax. Numbers I'll calculate, don't worry. It will give me EAT, earning after tax, or PAT, profit after tax. Then we subtract what? Preference dividend. This gives me profit for equity Let's put down some numbers. Let's suppose 25 lakh is sales, 10 lakh is variable cost. What you'll get? Contribution as, let's suppose 5 lakh is your cost. EBIT would be 10 lakh. Just assuming numbers from my side, 2 lakh. EBT would be 8 lakh. Tell me 40% tax, how much do we get? So what is PAT? You can write the full form in case you are finding difficulty. EBT is earning before tax, EAT is earning after tax, PAT is profit after tax. 40% will be 3 lakh 20,000 minus this, it will be 4 lakh. Let's suppose preference dividend is 1 lakh. So profit for equity shareholders is, if I give you number of equity shares, sir, for all equity 20,000. Find EPS for me. EPS would be please 3 lakh 80 divided by what? Please please 19%. What you calculate here in we have availability of these data on the Bombay Stock Exchange and National Stock Exchange for the listed company. What you are calculating, we are able to do it. Number of equities. This was only a base work for what I need to now do. I'm taking up a small example which will be slightly lengthy in nature, but that will cover almost 50% of the chapter what we are covering, the first one. First example itself, and that will have a link with your 11th class. Only things will change is in that question permutation combination will change. So my objective would be, what I need to do in first part of my chapter is a financing decision. I need to take a decision, should I raise money from any of these sources? Whichever source gives me the highest earning per share, that source I'll be selecting. So before I come to the book itself or a question itself, let's put down a small example. This will help you in understanding a format also. Now let me show you something before actually not get the feel of it. Chapter, take the time. Called Bombay Stock Exchange. This is the share of Idea. Vodafone Idea, what you use. And I love it for certain reasons. I'll tell you what felt from here. That moved yesterday 21%. Actually, this is part of the FNO. Not know in finals will tell you part of the derivative market. There is two markets in the stock market. One is cash market, one is derivative. This can increase by 20% in a day, 100% in a day, 50% in a day, and can fall also same. These are special category of shares. There are some shares which are there. Now it moved up. Few things which I want to understand, what chapter we are doing, what exactly has happened that the movement has happened in it. Now you cannot record this in the numbers. How will you record? I think you've never seen the recording of share price in your books of accounts. Let's suppose I'm new as you. Today I go back home and I tell someone Vodafone Idea moved because of some financing decision. And financing decision, this is how exactly you have to compare yourself with your friends. Otherwise, he is also doing the chapter, same questions you'll do. It's not that rocket science, certainly I'll get something from the Mars and tell you these are the questions which can come in the examination. It's not. Questions are same. They will not change. What will change is, let's suppose I'm very new and I went back home and I thought something happened in this counter. I only have to type in is Vodafone Idea news. That's it. And then lot of things will open up. And they'll only tell you, such awareness is there, they'll only tell you Vodafone Idea increases this much, increases this much. Vodafone Idea increases amidst buzz of equity infusion. You look at that means they're planning to bring money from equity. Actually, they have a debt of almost 2 lakh crores, the government pending dues, and it will close, will run, close, will run, close. No one knows. So they need money urgently to enter into 5G, etc. My objective is not to go into the whole story because that will take entire 3 hours if I go more than 3 hours. What is the objective is equity infusion. That means the funds coming in. If the funds comes in, it's only a rumor. Buzz, it's a rumor. No one knows. One says equity infusion. I tell you someone else. Someone else will say something else. I'll show you. Who's the owner of Tesla? Hmm? Hmm? Elon Musk. Oh my God, very good. Someone says Elon Musk is coming. No one knows what is happening. I'll tell you. High. They've changed the levels. What exactly it means is, if you look at, no one knows what is happening, but everyone only equity, equity. I'll just show you. They have, I think, removed that news itself. Let me see this. What it's. Look at this. According to the read this line, for example, you'll come to know. Basically, fundraising exactly same thing we are doing. We're not doing something new. We're doing exactly same thing. Should I raise from money from equity, debt, etc. Although in the theory world, when I'll do the questions, the majority of the answers will come when we raise money from debt. Maybe practically, when you raise money from debt, the firm becomes riskier. So there could be slight difference in the practical and theory world, but you should know that what exactly fundraising means is. For this, it was very important. According to the reports, the rise in the stock price is attributed to a rumored equity injection. Nothing has happened. No money has come. It's only a rumor. That means the finance market works on the anticipation. Sir, what if the money comes in? When the money comes in, there might be a possibility share price will not move because it has already moved up. It has already moved up in the anticipation. That is called financial markets. And exactly same topic we are trying to cover. So what exactly the topic you are covering is in your exam, I am not expecting he'll ask you that which source of fund is better off. In case says which source is fund, you have to take a decision by looking at your earning per share increases or not. Practically, we take a decision if this kind of a jump comes in the share price with the hope of the equity infusion. It means market assumes that if money is invested by promoters, na, it feels promoters have a confidence in that business. The business will not wind up. These kind of things I cannot cover in theory. So I want you to read on anything which will come similar to it. I'll keep telling you. Second important part, though Vodafone Idea is a loss-making company, let's suppose another company which TCS, let's suppose Tata Consultancy, for example. What we are calculating EPS, they'll give you EPS. TTM is a trailing 12 months. Every data is available. For example, this is the share price of the company. Why the share price is higher, lower? Maybe I'll have some topic in your this chapter only in which I'll tell you a difference between a share price and a face value and so that you'll get a clarity. Whatever best possible I'll tell you, but you should know that what you see EPS, for example, this is EPS earning per share 114.42. Trailing 12 months is since we are standing December end. So they're calculating from January to December. If it's a March end, they'll calculate from 1st April to March end. So it's a trailing 12 months. They'll give you all the numbers, whatever numbers are required. How do they calculate is they'll give you net profit, then accordingly net profit divided by the number of shares, they'll calculate the EPS. These are quarterly EPS. These are quarterly EPS and then they calculate the yearly EPS. These are ratios, net profit ratio, operating profit ratio, margins. These will be part of your course. So I expect you to know a slight of the Bombay Stock Exchange, or this is Bombay Stock Exchange. Similar type is National Stock Exchange. You should know how to look at the data, how to look at the company, how to look at the shareholders, whether the company has paid any dividend or not. These things, as and when we move, they'll keep coming back to your course. Today's objective is only to know which source of finance should I raise, and whenever the rumor comes, now this company is planning to raise money. Either the share price will go up or go down. If the share price goes up, it means the investors are happy. If the share price goes down, investors are not happy. raise the money. Problem could be what source you are raising money. Is that source beneficial for the equity holders or not? If they think that is beneficial for us, the price will go up. If they think it is not, price will go down. Then sir, why are we taking a decision based on the EPS when everything happens on the share price? I told you there will be some part here which is called accept. Although theoretically we see highest EPS is the best source, but I'll cover some portion in which I'll tell you you have to also take a decision based on the share price. For that he has to give you some additional data. 95% of the questions is on highest EPS only. Only 5% question recently institute has started going into the practical side of the markets. For that I'll cover up soon. So whatever decision increases the share price, is that also justified? Yes. If nothing is said, we will always take decision on EPS. So 95% or 90% of the chapter would be on the EPS. Practically, if someone asks how do you take a decision, you will say any decision which increases the share price, which increases the value of the equity holders is justified. That's it. Let's put down a small example below this. Let's put down a small example. Company needs to raise company needs to raise company needs to raise rupees 10 lakh. Company needs to raise rupees 10 lakh by any of the following sources. By any of the following sources. Company needs to raise rupees 10 lakh by any of the following sources. First point. First point. Raise entire amount by raise entire amount by issue of raise entire amount by issue of equity share capital at the rate rupees 100 each. First way of raising is, sir, raise entire amount by issue of equity share capital at the rate rupees 100 each. Second way of raising, raise 50% of the amount. Raise 50% of the amount by issue of 12% preference share capital. Raise 50% of the amount by issue of 12% preference share capital and balance by equity share capital at the rate rupees 100 each. Third point, raise 50% amount. Raise 50% amount by issue of 10% debentures. Raise 50% amount by issue of 10% debentures and balance by equity share capital at the rate rupees 100 each. Fourth, raise 25% amount. Raise 25% amount by issue of 12% preference share capital. Raise 25% amount by issue of 12% preference share capital. 25% amount by issue of 10% debentures and balance by equity share capital at the rate rupees 100 each. Basically, I have given you four combinations. Either entire 10 lakh by equity share capital, 50% by preference and 50 by equity, 50 by debenture, 50 by equity, and 25% by preference, 25% by debenture, and balance by equity. Will the question ask so many parts? Maybe no. Since we are covering everything, I have covered every combination of it. What could be the combinations here? Sir, what would change, by the way, if I have not completed my question? What would change? How much amount I'm raising? 10 lakh. If I raise the first, number of equity shares would be more. When I raise 50%, number of equity shares would be less, but there would be preference dividend in my income statement. If you try to analyze your income statement, what changes will come? In the first case, there would be no interest cost, there would be no preference dividend. Second case is preference and equity. Na? There will be no interest but preference dividend. Third case, there will be no preference but interest. Fourth case, there will be some interest also, some preference dividend. Then sir, what is the difference? Difference is, in all cases, number of equity shares would change. In this case, my number of equity share would be higher. Then since lesser amount, slightly different, and this will be slightly different. The number of equity shares would change. And rest part I am giving you is, I have not dictated the complete. This was only that what it means question is. After that, below that you write down. If tax rate is 40%, if tax rate is 40 percentage and EBIT is rupees 4 lakh, and EBIT is rupees 4 lakh, comma, which option is best? Which option is best? The first part will do along with me. What will make it? There are four possible scenarios. The way I do, exactly same way you will do it. After that, once you get habitual, then I'll leave you. Then you can go ahead of me after reading this. Let's put down the solution together, please. First, what we'll do is capital structure. This is my capital structure. I have four combinations. What I'll do is equity share capital here. I'll put first combination, second combination, third combination. Equity share capital, preference share capital. In first case, I have equity share capital entire amount 10 lakh. There is no preference, no debentures. I'll say entire amount would be raised from equity share capital. Second case, you tell me. 50 means 5 lakh rupees from here, 5 lakh from preference share. Debentures total. Third case, sir, 5 lakh equity, 5 lakh debentures. But is it required to make it? If it's a new combination, always yes. Last case is 25%, 25% and 50. Na? So 5 lakh is equity share capital, 2 lakh 50,000 here and 2 lakh 50,000 here. Total amount remains. Have I given you the issue price of equity share? How much? 100. Sir, will it remain same every case? Maybe no. In this case, yes. Why no? As we move forward, I'll tell you why no. Maybe no. In this case, since I gave you 100, it's okay. He will tell you, you cannot make out. Now, how do I calculate the number of equity shares? What I'll do is amount of equity share divide by what? Divide by this. 10,000. No? Second case will be, sir, 5 lakh divided by Rest all cases I think are 5,000. 5,000, 50,000. 5,000. After making this capital structure, the next part is to make income statement, and we'll select whichever option is highest. And I have given you starting term as what? EBIT. So you'll start EBIT. What we'll do is exactly same structure, exactly same way, calculation of EPS. Sir, where do we show working note, etc.? Everything is part of the solution calculation. You have one. Start from EBIT. EBIT less what? Interest. Let us first put down the EBIT. And interest, two columns you have na, so leave approximately 2-3 lines, because I'll show the calculation here only. Let me do it once. In fact, EBIT was how much? 4 lakh. First case, what was the interest? No interest. The EBT would be 4 lakh. Tax what rate? 1 lakh. This will be earning after tax or PAT. How much? 40,000. Less preference dividend. PAT oblique earning after tax. No preference dividend here, sir. Will be profit for. So does this kind of question comes in exam? Yes. How many marks? 5 to 8 marks. In fact, this chapter weightage is 5 to 8 marks. But do not get overconfident. Starting wise, everyone will show you good thing about the topics, chapters. Then suddenly, once you get entrapped, subject starts. Our subject is not challenging at all. I'm saying. Like 40, and then we have what, sir? EPS. EPS would be equal to how many number of shares we had? Those who have got the hint, try quickly the second, third, fourth part, please. Structure is clear now. I do not have to draw that structure again and again. EBIT will remain 4 lakh. So I'll move here. 4 lakh. Second case also there is no interest. In this case there was preference dividend, I think. 5 lakh into what percentage? That's how much comes? 60,000. Number of equity shares were 5,000. Third case. How much tax? 1 lakh will be 2 lakh 10,000. No preference dividend. How much do we get? Last part, 4 lakh, and the 2 lakh 50 into what? 10%. How much do we get? Tax amount 1 lakh. That 2 lakh 25. Preference dividend would be 2 lakh 50,000. Well, how much? 1 lakh 90. 39. Best option is this. Decision would be also carries a marks. Third option is best. Yes. Third option is best since it gives highest EPS. Third option is best since it gives highest EPS. Fine. Look at the question from the exam now. I'll go back to the questions now. Question number 11. Question number 11, page 1.7. Ganpati Limited is considering 3 financial plans. The key information is as follows. Total investment to be raised 2 lakh. Total amount to be raised 2 lakh. Plans of financing proportion. Plans A, B, C. Equity, debt and preference share. 100% equity. That means entire 2 lakh will be from equity. Then you have 50-50 percentage. 1 lakh 1 lakh, and then C is 50-50. 1 lakh 1 lakh. Tax rate 50 percentage. Face value is 10 rupees each of the share. Equity share of face value of 10 will be issued at a premium of 10 per share. That means issue price would be what? Issue price would be 20. Now before I move forward, in first case, how much amount you will raise from equity? 2 lakh. Divide by 20 number of shares. How much thousand? 10,000. Second case, how much money you will raise from equity? 1 lakh. Divide by what? 5,000. Third case, 1 lakh. Divide by 5,000. Second case, there would be some interest component. Third case, there would be preference dividend. Expected EBIT 80, cost of preference 8, cost of debt is 8, that's interest cost. You are required to determine EPS. And we are doing only first part. For second and third part, we'll leave some. First part, since you're comfortable, first thing you'll do is make the capital structure. Make the capital classwork, 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 classwork. So I can use solution 11. You do it on your own, I'll do on my own, and then we'll tally capital structure. And try not to flip back the pages. That shows that your memory is very short term memory. Try whatever best you can do. Here cap 8% venture. Back was the first option. Please remember issue price is 10 plus 10 20. He says 10 rupees face value and will issue at what? 10 rupees premium. Calculation of EPS now. Now you can help me out with the numbers. First case EBT I think would be 80,000 only. Tax at the rate 40,000. That would be, there is no preference dividend here. EPS would be, I'm directly writing 4. You can show the formula please. 40,000 divided by 10,000. Show the formula. 40,000 rupees divided by 10,000 rupees. Second case you'll have 70,000. That would be, no preference. 36 divided by 5,000. 7 point. Third case. Thirty. Second option is best. Decision is C option is best since it gives highest. Plan. Since it gives highest AP. Second and third part leave one page. I'll have to cover up small topic. After that we can do. Second and third part leave one page. This is nothing but calculation of EPS. Tenth question I think you should be able to do. Just quickly read once. I'll give you as a homework. First part. Same. It is same as 11th question. Just read question number 10. A part I'll give you as a homework. Can you do as a homework? Same, exactly same. Nothing changed. Only the figures are changed. I think slightly. First part you can do as homework. Second and third part once we do financial break-even point and so on, come back to it. So 10A, that means 10 E earning per share is your homework. Come to question number 1 now. This has been exams one of the favorite questions. For 1. You read out once, then I'll read out with you. Read once please. Then I'll read out with you this. If any one of you understand, let me also know what has to be done. Or I'll ask you a question in fact. How much amount to be raised? 25 lakh. What is EBIT given? 5 lakh. And what are the options of raising? What are the sources of raising first? What are the equity and debt? Two combinations. It's equity, debt, and combination he can make is three. Either he says 2 lakh 50,000 from debt, balance 22 lakh 50,000 from equity, or 10 lakh from debt, balance from equity, or 15 lakh from debt, balance from equity. This is important point. Now its onus is on you also whether I say or not. Every question will ask you calculate EPS, but there has to be some point which is different. In this question, whatever point is different, you have to highlight so that when you revise for the exam, you should know I'm reading this question for this particular reason. This is the line which is different here. This is the line. That's it. Rest is same. Rest is same. It's only a combination only. Nothing changes. Every question will have some additional point. I'll highlight initially, but after that you should keep a habit of highlighting. It says company's share is currently selling at 150. That means issue price would be 150. Sir, why 150 not the face value? Practical life, when the new shares are issued, they would always be issued at what? The share price only. If they are issued at share price face value, na, then I would have become billionaire in a single day or millionaire in a single day. Let me show you something. There is a company called MRF. You know the price of MRF? 70? 1,30,000 rupees. The fees of CA Foundation, Inter, Final, even if you combine together, you cannot buy one single share. Nalaik. Nalaik, don't worry. Nalaik is a love language. Don't feel bad. By love, I say Nalaik. You can in mind say ultra Nalaik to me. I do not say it someone, they'll feel bad. Nalaik is what? By the way, Nalaik? Go back home, open up the dictionary. Nalaik means useless fellow. But it is not useless. Just telling you, it's a love language. No, if you are Nalaik, I'm Mahanalaik, don't worry. So this is how I'll quote you Nalaik. What did I say? MRF. Face value, look at the face value of MRF. How much is face value? Can you see something here? How much is face value? 10 rupees. Now one question should come in your mind. Why share price 1,30,000 and face value is 10? Wait for some time. I think in Inter itself will come, or maybe within few classes only it will come. I'll tell you why exactly this means. It's not everything will have same. Some company face value 10 could be share price 5 rupees also. Idea 6 months back was 7 rupees price. Face value is 10 only. If I show you idea, that means, sir, we should buy idea. Nalaik, no. That could be overvalued. Even 1,30,000 is cheaper, and this is costlier. Some time back it was 5 rupees 70 paisa. Can you see that? It has recently moved up. This was 5 rupees 70 paisa, 52-week low. What date, sir, it was there? It was 31st March, 5 rupees 70 paisa price. So, and face value 10 only. That means this face value 10, price is 16 rupees as of now. That face value 10 price is what? 1,30,000. So there has to be certain thing, and this is exactly what you learn in the accountancy. But actually, problem in the accountancy is you just pass the book entries. You never realize what is happening. Madam comes in, or sir, now sir comes in Inter, and you come in, open up, register, pass journal entry, bank account debit to capital account, machinery account debit, 1.5 hours, lunch break, go for the lunch, come back. We never get the time to think why is it happening. Financial management tells you why is it happening. The price of the idea 5 years back before the Reliance Jio came used to be 170, 180. This came down this much. This is not only one company you are seeing. That's although 1,30,000 is the only one company we have above 1 lakh, but there are a lot of companies which can have prices. Let me show you. Unitech. Like GVK used to be 2 rupees. GVK, you've heard the name GVK? South based company. Now it has moved 7 rupees. It was around 2 rupees for a long time. 2 rupees share. But face value is less, I think. 1 rupee face. 2 rupees. Why the prices are 2 rupees, 10 rupees, 5 rupees, 16, 1 lakh, 50,000, etc. There is certain reason behind it. That reason you will learn. But yes, certainly we cannot spend that much of a time what we are spending today. With the relevant topics, I'll keep taking up. What objective was to tell you was, whenever a company is issuing share, either he will mention, if he does not mention, so whatever is the price, at that price it will be issued. For example, if you go today and tell Reliance, you issue the shares to me. They will not issue at 10 rupees face value. They will give you whatever the market price. In simple words, if you go and buy today property in Panjagutta, you'll be getting property at what rate? The market price or 20 years back price? Market price. Property no one has a problem because you see it every day in day out you watch. Same is with the gold. Same is share price. MRF could have been 10 rupees, maybe 30, 40, 20 years back. But now whatever the price is, at that same price you get the shares. For example, idea is 16. It does not mean that after 1 month it will remain 16. It could again come back to 10 or it could be 30 also. So no one knows what price will become. So whatever is the price, at that price shares would be issued. In our case, this was the new point. The company share is currently selling at what? 150. Expected to decline to 125 in case the funds are borrowed in excess of 10 lakh. That means first combination issue price would be 150. Second combination issue price will still 150. Please remember it says borrowed in excess. Excess borrowing is third case. Third case, the number of shares when you are issuing will divide by 125. Very good. The funds can be borrowed at rate of slab rates up to 2 lakh 50, 10 percentage. When you raise above 2 lakh 50 up to 10, you'll raise at what rate? 15. That means it's a kind of a slab rate. So first 2 lakh 50, then if you go to 10, first 2 lakh 50 will come at 10, then will come at 15 percentage, above 10 will come at 20. The tax rate applicable to company is 50%. Which form of financing should the company? Let's exactly do the same way. Let's put down class work, no homework, have a space. Very good, sir. What I'll do is start from question 1. Capital structure. Equity share capital, how much? Tell me the three cases. Or do one thing. Let you know confirm na what the amount you'll raise. So first put down this 2 lakh 50. Second case 10 lakh. Third case the total amount, sir, we know is 25 lakhs. So this will be what balancing figure? Ten lakh. Very good, sir. Issue price. You can highlight this point. This is new point. One fifty, 150, 125. Issue price in this case is how much thousand? 15,000. Very good, sir. I'll directly write here. You'll write the formula 22 lakh 50 divided by 50,000. And make sure your calculators are working. 10,000. How much thousand? Yes. Let's quickly calculate what? EPS calculation. calculation of EPS, EBIT. How much? 5 lakh. Less what? Now in this case, what I'll do is I'll make my working note here only. Look up please. How I'll make. First option, how much was the debt? 2 lakh 50. So what I'll do is 250 into what percentage? 10. Second case, what I'll do is I'll do 750 into what? How much percentage? 15. Third one, another 5 lakh will come at 20. Now look up please. What I'll do is this is my sir will come in only option 1. This will come in option 2 and all three will come in what? I hope you are getting my point. So if you want to show working note separately, problem with the working note is sometime I might not be knowing how much space I have to leave and then make my working note. Whatever possible notes I can make along with my solution, I'll always make. Your institute at lot of places will say working notes should form part of its solution. So this was easier stuff. I've taken it. So what does it mean? It means is I'll show this 25,000 will come here. This will come in the second case also, and this will come in the third case also. Nothing will come here. 7,50,000. This will be 1,12,500 will come in this. It will also come in which part? Third part, because third part is total 15 lakh. So it has to be 250 plus 750 plus additional 5. Last 5 will not come here. That will only come in the last part. That's now, sir. How do we read this? Basically, way of reading is this first one is only representing on 250. These two are representing basically what? Both of them 10 lakh, and third is representing 2 lakh 50. Second one 750 and third one, the last one is 5 lakh. So total 20. So I made the working note here only. This becomes this EBT. Finish it off on your own. Let me see what I can give you further as a home. Anyone who has done EBT 4 lakh? Second one 362. Very good, sir. 2 lakh. Then I have less. $50. Second one that will be same. Second one, third one, no preference. Divide by what? Number of equity shares. I'll directly write EPS. So that would be equal to 15 point 181 250 divided by how many shares? Third one. How much thousand? 16 point. Decision, please always write. It carries a number. Decision. Always write decision, please. Second option is best since it gives highest E. Second option is best since it gives highest. Those of you who would have done, just see question number 2. Is it manageable? I'll give you as a homework. Just check once, please. Read the language only. That's it. Read the language only, please. Manageable, na? It's exactly same, I think. Do not, when you do at home, na, now there are two ways of doing it. Especially in these type of a question, either you keep doing structure, capital structure, etc. Only one practice, rest of them you know how the format is done. Now, what should be the way of reading these questions? How I would have done was, I'll not even look at the answer. I'll just look at the last part of the answer. That's EPS for these questions. The way is, it says Y Limited requires 50 lakh. The project expected EBIT 10 lakh. Deciding objective maximizing EPS. Two alternative 5 lakh, 20 lakh, and balance in each case by. It's only two options he is given, na? It's okay. That means first one is how much? 45 lakh. Second is 30 lakh equity. And the company is currently selling 300, expected decline to 250 in case funds are borrowed in excess of 20 lakh. Now what I can do is, I know I can roughly write here. Let's suppose I'm assuming N1 number of equity shares and 2 as in second option equity shares. 5 lakh minus 50, how much? 45. 45 lakh divided by what? 300. This is the way of revising at home, assuming I'm doing the exam revision. How much it comes? Number of shares? 45 lakh divided by 300, 15,000. N2 is basically 50 lakh minus 20 divided by 250, 12,000. Number of shares have come. Very good, sir. After that, the funds can be borrowed at the rate of 12% up to 5 lakh and 10% over 5 lakh. That means if I calculate my interest in the first case I1, it will be, first case is 5 lakh. 5 lakh into what percentage? 12. I'll write here 60,000. I2 would be equal to, what you do is 15 lakh into 10 percentage, 1 lakh 50 plus 60,000. That means it will be 60,000 first plus 1 lakh 50. How much it comes? After that, you do not have to even look at anything else. Now open up your calculator. Calculator is open only. Like 0. 0 should come. How much is EBIT? 10 lakh. Type 10 lakh. 10 lakh minus first case interest 60. How much comes? Something comes 9 lakh. tax rate is what? 25. Multiply into 75 directly, Pat. Something comes, divide by what? 15,000. If we have not made a mistake, answer should be 47. Let me check. Answer is not given. Oh my god. Very good. 47. Again put 10 lakh minus 2 lakh 10. Whatever comes. Now I'm not showing it to the examiner. I'm doing for my calculation. Into 75% is directly. If 25% is tax, 75% would be what? Pat. Into 75 some number comes. Divide by what? 12,000. Hmm? This is 10,000. Alright, this is 10,000. Check the N2. Check N2, Nalike. Ah, oh, it's confusion he has given. It's excess. You're not borrowing in excess. You're not borrowing in excess. 10,000 only. How much thousand? 10,000. 10,000. You got some answer na? 47 point. How much you got? First answer before this. Wrong answer was what? Wrong answer was 49.37 na? Multiply it by 12,000. Wrong number of shares. That was your PAT. Divided by 10,000. 59 point. Sir, we did not get do it Nalike correctly now. I was telling you, examiner when he creates a reverse calculation, how does he create? He'll say I wrongly multiplied by 12, I got this answer, it would have been 10. So reverse calculation also he can give you. By chance that question was framed. There would be some question which he'll do wrong calculation, then you have to do right calculation. Now, if I actually what happened was earlier we calculated EPS using 12,000, na? That was wrong. He told that number of shares we have taken wrong because it is X. You got the point, excess of 20. We are not borrowing excess of 20, so divide by what? 300 only. The problem was wrong answer came, it's okay. Now examiner can make a question out of it. He wrongly calculated his EPS as 49 point something, but the share should have been issued at rupees 300 only. Recalculate the new EPS. How would you do? Wrong EPS, wrong number of shares, wrong PAT will be same, then PAT divided by the new number of shares. That would become a next type of a question itself, and it will become one of the questions in fact. So how does the examiner also sets the same way questions? Now in our case it's 10 lakh minus you do is 2 lakh 10 only into 75 percentage divided by 10,000. Tell me the EPS. What? I think that should come 59 point. This is the best option. I hope manageable this part here. This can be done. Let me see what you can do further before you go for a break. This I'll do with you. 10th I've already discussed. In fact, 10th A part is manageable. That's book. Look at 12th question A part only. Answers would be either given in the book itself or I'll separately share the answers of the homework with you. A part you can do exactly same. Look at please 12th. 100 lakh plan A equity debt, cost of debt 30%, share of 10 issued at premium of what? 15, 25, 40. Only first part do it please. Only first part. You'll be able to get some points here. Second and third do not do it. 12th part, A part would be manageable. This is also exam question which I covered as, I'll give you as the last because problem. recently came. He has given you 21 number question. He has given you 1 lakh, selling price 40, variable cost 20, fixed cost 10. Just wait for the time. Let us do some more questions, then you can actually increase your EBIT level. Let's quickly take 10 minutes energy nap, and then as of now what I've given you homework as question number 2, question number 2, 10th A part and 12th A part. That's it. Let's take energy nap of 10 minutes and let's start. Come back please. Now whatever questions we were doing, they were all combination of equity plus debt. There could be a possibility, let's suppose, just putting a small note here. There is something called existing balance sheet, and in existing balance sheet there could be a possibility equity share capital you have 10 lakh, and then there could be 10% debt 2 lakh. There is a possibility you have equity share capital 10 lakh, 10% debt of 2 lakh, and let's suppose company says new amount required, new amount 4 lakh. Three possible scenarios he can give you: either raise money by equity share capital, 11% debt, or preference. Existing balance sheet you have equity share capital 10 lakh, 10% debt 2 lakh, new amount required 4 lakh, equity share capital 11% debt, and you have preference share capital. Now if I make this balance sheet, you know what will happen? Will the old equity share capital come as it is? Yes. If you are already having a 10 lakh capital, that will not change. Plus new capital would be 4 lakh plus 10% debt. This will be the structure. In case you raise money by debt, please do not make a mistake. Equity share capital will stand old as it is, because already you have the capital. This will not change. Now why I am making this case is because if question gives you a capital structure existing, as of now what we have done, he says raise money by equity plus debt, equity by preference share, equity debt preference share. In this kind of a structure he can say raise money only by debt. The problem you might face is, sir, how do we calculate number of equity shares? Number of equity shares are already there since it's a case of existing business. So in the second case, when you raise money from debt, whatever number of equity share old were there, they will remain. What will happen with the debt is you'll have two debt now. 10% debt, how much? 2 lakh plus what? 11% debt of how much? And third case, you'll have what? Third case, equity share capital, how much? 10% debt. Max. New will come what? differential. So this could become a case of existing structure in which it's not necessary you have to raise money by debt. It's only raise money by equity. There could be possibility raise only money by the debt or raise only money by the preferential. Copy this down quickly. Let's look at question number 7 once you've done. Let's look at question number 7. It is Jojo Limited presently had 36 lakh in debt outstanding bearing an interest rate of 10%. It's existing company since debt is already there. It wishes to finance rupees 40 lakh expansion program. That means it needs new money of 40 lakh. 40 lakh expansion program and is considering three alternatives. Additional debt of 12% interest, preferred stock with 11% dividend, and the sale of common stock at 16%, 16 rupees per share. So three possibilities are this additional 40 lakh either you will raise by debt of 12%, preference share stock, or what 11% dividend, or equity share. Common stock is a equity share 16 per share. The company presently has 8 lakh share of common stock. Common stock is equity share. 8 lakh shares are already in existence. Nothing to be done with that. Is in and company is in 40% tax bracket. If the EBIT presently is 15 lakh, what would be the earning per share for the three alternatives, assuming no immediate increase in the profitability? So basically, options you will have, you will either raise money from debt or preference share or equity share. There is no combination, and even I do not require to make any kind of a capital structure here. I do not require any capital structure, unlike what you have done. For example, in the above questions you have done. Now, this part is not required. This is only required when you have a combination, because you need to find number of equity shares. In this case, since it's a question which is of existing nature, we'll directly start with the calculation of EPS. Sir, the old debt which is there, will it remain in the all three cases? Old. If you go back and check, if you go back and check here, the old debt was 2 lakh, 2 lakh, 2 lakh. This will remain as it is. Whatever new will come only in one option, debt option. Please understand what I'm saying. Generally, a student will have a doubt, sir, how the old debt comes in the equity case. If I am existing company, let's suppose I have taken a car loan. If I have taken a car loan, that car loan will remain as it is. If I'm buying a new car, that new car, whether I'm buying with the equity money, debt money, or a preference share money, that I have to take a call. But the old loan will come in all the cases. Please look up here. 2 lakh came here also. 2 lakh came here also. 2 lakh. This was existing balance sheet you had. This was existing balance sheet you had. So I'll make my three cases. Will directly write. It's a calculation of EPS. Let's put down 7. So Calculation of EPS. First part debt. Second part preference share capital. Third part equity share capital. First part debt, second part equity share capital, third part preference share, third part is equity share capital. EBIT. How much is EBIT? Second case. Third, interest. Old interest will come in all of them. How much was the old interest? How much will be? 3 lakh. New. 40 lakh into what? How much? 4 lakh. This will come only in which case? First case. EBT. 6 lakh. Second one. 11 lakh. Third one. Then tax at the rate. This will give me what? This is earning after tax or PAT. 40% tax is how much? Lakh 60. This will come 3,96,000 I think. Second case is how much tax? 4 lakh. Six lakh. Guess what? 4 lakh. Then we have what? Profit for? Hmm? 6 lakh. 396, 244, 6 lakh 84. Then we can have what? Number of equity shares. Now please remember, when I write here number of equity shares, please do not make a mistake here. First case, second case, third case. The existing equity shares will come in all. Existing equity shares. How many we have existing? 8 lakhs. 8 lakhs. And new equity share will come only in the third case, and which you are issuing 40 lakh at what rate? At 50. So basically, if you look up, in the first case we had additional debt, which I am highlighting in yellow. Second case you had additional preference share, and third case you have additional equity. Rest data was same in all three because it was a existing question we had. Basically, now what we can do here is total shares. My total number of shares would be 8 lakhs. Second one, 10 lakh 50. EPS. Profit for equity shareholders divided by what? Three lakh 96,000 divided by what? Second one, 10 lakh 50,000. How much do we get? 0.495. Point. Which option is better? Third option is better. Write down the answer. Equity option is better. Equity share capital is better. Leave one page after this, please. For second, third part. Leave one page after this for second, third part. Leave one page after this for second, third part. Before I move to the next type of question, I'll have to take help of some ratios. This will solve my slight purpose of the chapter called ratios. Some of you might have done in the accountancy. Some of you might have done in the earlier level in the ratios chapter, 11th, 12th class maybe. So what ratios I'll be requiring for this chapter? Ratios to be used. I'll use three ratios. These are informal, no time dictating. This will solve some, give me some breathing space of this chapter. Because without these ratios I cannot do. One is called return on investment. You would have heard this term. Return on investment, ROI. Also known as return on capital employed. Have you done anywhere return on capital employed or return on investment? Which, where have you done? Hmm? See what chapter? Ratios were there, no chapter. You have ratios chapter there now. Yes. Foundation, you know, CPT world, foundation world. Just before inter. From there you come here. You're done, I know. Actually, Institute has introduced this chapter in the foundation newly, but they did not remove from your chapter, I think. Ratios. Return on investment you've done. Formula anyone remembers? EBIT by capital employed. But anyhow, don't worry. I'll tell you how to remember the formulas now. The objective is how to remember the formulas, else you cannot run the one ratio more you would have done. Return on shareholders fund. Return on shareholders fund. And third ratio is return on equity shareholders fund. ROI, return on shareholders fund or return on equity shareholders fund. Don't worry, I'll take help of numbers also. I'll take help of different ways also. You'll get absolute clarity of this topic. No need to worry. When I say equity shareholders, you know money involved is of whose? Only of equity shareholders. When we say shareholders, money involved is of equity shareholders plus preference shares. When I say capital employed, that three people have the money involved. Equity shareholders plus preference shareholders. C is what? Capital, sir. Preference share capital or preference shareholders, one and the same thing. Plus debentures. Now, what are we trying to learn? We are trying to learn who has invested how much money and how much they are earning their level. For example, in our calculation, we do EBIT minus interest. Let me show you any of the, just wait before I come back here. You have done this farm part here, let's suppose. Look at the any part of this choice. When you stand here, this earning will be divided in three people, EBIT. One for the interest, second for the preference, third for the equity. We call EBIT is the income available for three people. When I subtract interest and tax and I start at PAT level, from PAT, two things will be divided. Money who has invested, it is immaterial, but PAT is available for two people. If there is preference, some part will go to preference and rest will go to equity. And third, when you stand here, sorry, profit for equity holders. This is money only for equity holders. Now, what I'm trying to learn is if I'm saying return on capital employed, EBIT is the return, how much three people invested money and how much three people earned money. When I say PAT level, this income is only for two people. How much money was invested by equity holders and preference shareholders and how much money they earned. That's PAT level. When I say profit for equity shareholders, I'll say how much money was invested only by equity shareholders and how much is the amount they are earning. For example, we say I invested money, I earned money. We two invested money, we earned money. How much? We three invested money and how much money we earned. So EBIT is before interest means from EBIT three people will share the income. Interest, preference share and equity. From the PAT two people will share income, preference and equity. And third is only equity holders. So when we are looking at the ratios, we are trying to see the formula. We are saying return on investment. I call it as investment was done by three people. Their money in earned is EBIT divided by capital employed into 100. This is the formula. From EBIT, if I remove interest, but obvious I have to remove tax also because tax is not available for shareholders. So level becomes what? PAT. From denominator, I'll remove debentures. That will be shareholders fund. That means two people money, apple to apple comparison. Two people money, two people earning. And from PAT, we remove preference. It becomes profit for only for equity shareholders and the denominator is equity shareholders fund into 100. How do we calculate these fund etc. that I'll tell you, don't worry. So this is called apple to apple comparison. If there is an income of three people, investment of three, income of two, investment of two, income of one, investment of one, how much particular level they are earning. Copy that formula. Then I'll take some number, an example. put down a small example. This will save our time in the ratios chapter. Example, using following data, calculate ROI, return on shareholders fund, using following data, calculate ROI, return on shareholders fund, return on equity. EBIT given is equal to 6 lakh, 40 percentage, and then balance sheet is given. Fixed assets, current asset, fictitious asset. In the recent trend, fictitious assets are shown minus from the income only. 10 lakh, equity share capital, reserves and fictitious assets are carried forward losses. Equity share capital 4 lakh, reserve surplus 3 lakh, 12% preference share capital. 10% ventures. Current liability 7 9. Total of the balance sheet is total of the balance sheet is 15 lakh. Now first we'll find the capital employed solution, so that you know how to find capital employed. Two ways, either use liability side or asset side. Capital employed. What I'll do is equity share capital 4 lakh plus reserves and surplus 3 lakh. If you subtract fictitious assets from here, this is known as equity shareholders fund. Money invested or available for equity shareholders 6 lakh. If you add to it preference share capital, this total is known as shareholders fund. And if you add to it debentures, this will be known as capital. Equity shareholders fund is 6 lakh, shareholders fund is 8 lakh, capital employed is 11 lakh. If you calculate the same from the asset side, your formula would become, basically if you try to look at what I have done is, if you would have looked at here, you add up fixed asset, add up current asset, subtract current liability. It will be capital employed only. What is the meaning of capital employed? How much money is invested in the business, in the asset side? So basically I say my whole money is invested here. Out of this 3 lakh amount is financed from the current liability. That means equity, preference and debenture holders have invested only 11 lakh. Understand meaning of capital employed? This is my amount. and this amount is invested in the assets. I'm saying how much is the amount of equity and debt and preference share invested in the business. We say 4 lakh plus 3 lakh plus 2 lakh plus 3 lakh, that's 12 lakh, but out of that 1 lakh is fictitious asset. This is not investment, these are carry forward losses. It means 4 plus 3 7, 7 plus 2 9, 9 plus 3 12, minus 1 11 lakh is invested in the business. So second way of looking at the answer is fixed assets, current assets. In fixed asset 10 lakh amount is invested. In current assets 4 lakh amount is invested, but out of this 3 lakh is investment by the current liability. That means balance people have invested 11 lakh. Any approach can be used in the exam. Now using EBIT, I need to calculate my income statement. EBIT available to me was 6 lakh, I think. 6 lakh amount, if I read, I say 6 lakh is earned when we invest 11 lakh. There is no challenge here. But I have to go to the equity holders. From here I subtract interest. Interest I gave you 10% on 3 lakh. 10% on 3 lakh. How much it comes? This becomes what? EBT. 5 lakh 70. Tax at the rate. How much? 2 lakh. That will be equal to how much? Preference dividend. How much? 24,000. The profit for 3 lakh 18,000. Now I can calculate my formulas. Return on capital employed, ROI. ROI was EBIT by capital employed. EBIT is 6 lakh divided by 3 people earning and 3 people investment. How much? 3. Return on investment. Second is return on shareholders. That 2 people earn 3,42,000. Their investment is 8 lakh. Combined investment by both of them is 8 lakh. The reserve surplus belongs to whom? Equity shareholders. Reserve surplus only belongs to equity shareholders. 42 point. Third part. Return on equity shareholders. Profit for divided by equity. How much do we get? 3 lakh 18,000 divided by 50. How would he ask this in the present chapter is, we look at the question. How would he basically framework the questions on this topic? It is not he'll ask you the ratios, but because in the final paper he'll not say that which chapter you've done. As of now, we have not done the ratios. Whatever relevant ratio was required, I've covered it up. By the time we'll go to ratios, you'll be comfortable with all three ratios. Now, what he will give you, mark stars, question number 3, I think. Very important question from the examination. Third question. Read the question once, I'll then read out with you. Number 3, put 3 stars. This is case of an existing business. Let me read out. Says company earns a profit of 3 lakh per annum after meeting interest liability of 1,20,000 and 12% debentures. Keep helping me out some figures. Profit, company earns profit of 3 lakh after meeting interest liability of 1,20,000 on 12% debentures. 3 lakh is given what? 3 lakh is after interest. This is given as what? EBT, profit before tax. EBT 3 lakh. If EBT is 3 lakh and 120 is this, can you calculate the EBIT? EBIT would be equal to 4,20,000. And if 12% debenture rate you have and 1,20,000 is your interest, can you indirectly calculate the amount of debentures? I hope easily calculate. X amount into 12% is 1,20,000. So what would be my debenture amount? So first line can tell me what is my EBIT and what is my debenture amount. I can calculate. Don't worry, we'll put on the paper everything. The tax rate is 50. The number of equity shares are of 10 each are 80,000. That means existing number of shares are 80,000. Retained earning amount to 12 lakhs. The company proposes to take up expansion scheme for which sum of 4 lakh is required. You want to raise how much further finance? 4 lakh. It is anticipated that after expansion the company will be able to achieve, highlight this point please, you will be able to achieve same return on investment as at present. It will be able to achieve same return on investment as present. Now sir, why is this important? Because as of now he says ROI will remain same. Let me recalculate the question once again. He says ROI will be same. Let me talk about the existing. From the first line, do you know what is your EBT? Check the question. 3 lakh. 1,20,000 add EBIT is what? 420. Keep aside 420. Is that fine? Now, how do I calculate my existing ROI? Divide by what? Capital employed. Capital employed means now what, sir? Do I have a debt option available? Debt would be, sir, 1,20,000 is 12% debenture. That means debt would be, debenture would be 10 lakh. Equity share capital would be 10 plus 80,000 into 80,000. 8 lakhs equity share capital plus 12 retained earning. Formula, look at this please. There is no preference here. It means equity share capital plus reserves plus debt. So my existing capital employed is what? 30 lakh. 10 lakh debenture, 8 lakh equity share capital, 12 lakh retained earning. Now talk in a general language. Capital employed 30 lakh, earning for them is 4 lakh 20. What is your ROI? You invested, all of you combined together, that means debentures plus equity invested 30 lakh, earning 4 lakh 20. What is your existing ROI? 14% is the earning rate. Now question says same ROI will be after expansion. That means percentage wise my return would be 14. whether I raise money from equity or whether I raise money from debt, it is immaterial. He says I need to raise how much? 4 lakh. That means should whether I raise money from equity, debt, any source, my capital employed will become existing is 30, new would be what? 34 lakh, because 4 lakh I need to raise further. Existing is 30, new would be 34. My return would be how much? 14. 34 lakh into 14, that will be my new EBIT. Please understand what I'm saying. I hope you got my point. He has indirectly told you how to calculate new EBIT. That means first we'll calculate existing EBIT, existing capital employed, existing ROI. ROI will remain same. That means return is 14 earlier also, return is 14 now also. Earlier you were getting return on 30 lakh capital employed. Now you will get return on 34 lakh. Sir, how 4 lakh? Which source? Any source. Capital employed is capital employed. So it will be 4 lakh 76,000. That means your new EBIT would be 4 lakh 76,000. The funds required for expansion can be raised either through debt at rate this or equity issued at par. Calculate the earning per share. Finance were raised from debt or funds were raised from issue of equity shares. So once I know 4 lakh has to be raised, I know my new EBIT would be 4 lakh 76. If I raise from debt, additional interest will come. If I raise from equity, additional. You got the point? What has to be done? This is how he'll be using ROI. Sir, once again, using existing EBT interest, I'll calculate EBIT. Using the existing data, I'll calculate existing capital employed. Using existing is old. EBIT capital employed, I'll calculate existing ROI. The new ROI would be equal to existing ROI. Based on that, we can calculate new EBIT and then we can make our normal structure. Let's put down the answer. Put down existing EBT. Sorry. Existing EBT is 3 lakh plus interest. This is my existing four lakh 20. Interest is equal to 1 lakh 20,000 and this is equal to how much debentures? 12% debentures. Can I find implies debentures would be equal to 1 lakh 20 divided by 12 percentage 0.12. 12 percentage is 0.12. That will be equal to 10 lakh. If I add plus existing equity share capital plus retained earning. Existing equity share capital is 8 lakhs. Or how did you calculate? You can put down in bracket 80,000 into 10. He said 80,000 share of 10 rupees. Retained earning how much? 12 lakhs. Retained earning 12 lakhs. Existing capital employed. Existing capital employed. How much do we get? Existing capital employed 30 lakhs. Can we calculate existing ROI? Existing ROI would be equal to what? EBIT divided by capital employed into EBIT is how much? Capital employed 4,20,000 divided by, this we get as 14 percentage. Now I can put down my new ROI would be equal to what? Old I. That is very important part. Correcting part of the question is this. Once you've done till here, let me know. I'll put down as new ROI equal to ROI is equal to what percentage? 14. This is the most important part of the, and I can find my new capital employed. My existing, in exam do not write CE, please write complete capital employed. Existing capital employed is 30 lakh. You need to raise what? Additional capital. How much lakh? New capital 34 lakhs. New capital employed would be 34 lakhs. New EBIT, we can easily calculate now. If you want to put the formula, it's okay. Otherwise, without putting formula, just speak in word, please. You invest 34 lakh. On this 34 lakh, you learn how much percentage? 14 percentage. So simply multiply 34 lakh into 4 lakh 70. Now you can calculate. Now you can calculate new EPS. Calculation of new EPS. Calculation of new EPS. First part, you will raise money by debt. Second part, you will raise money by capital. EBIT, four lakh 76. Less what? Old interest will come in both. Please remember that. Old interest would come in both. How much was the old interest? 1 lakh 20. This was 120. This is also what? New interest. How much money you are raising? 4 lakh. And what is the rate? 12%. It will come only in EBT. How much? 3 lakh. Tax at the rate. One lakh. 1 lakh. Then find number of equity shares. existing, new. This is nil. 40,000, sir, because 4 lakh at the rate of 10 each. And you can find EPS. Write the formula for EPS, profit for equity holders, divide by this. I'm directly writing the numbers. How much? 1 point, first one. 1 point. The answer would be it is advisable. It is advisable to what? Raise money from. It is advisable to raise money from debt since it gives. Higher. It is advisable to raise money from debt since it gives higher EPS. But 3. Read question number 20th. I think you should be able to do it at home, please. Exactly same lines. Again, recently came in the exam. Read question number 20th, please. Two zero 20th. Can you do at home, please? 20th question. Check quickly. 20th would be your homework. Exactly same. The first time it came in 2002, and after that it came in December 21. Almost 20 years gap. Same thing. ROC you can calculate exactly same. Some numbers would be different. And what would be required EBIT, and then accordingly make. That's it. We'll wind up here today. Rest will continue in the next class because I have to touch another topic. Thing in sample for the today. Take care and bye bye. Here and bye bye.